Hi, Jonathan York, Bay Financial Partners. Look at the investment markets. Pretty historic movement in the US equity market, especially the Dow. That touched 40,000 for the first time. Now that's a pretty amazing up move because back in March of 2020 it was below 20,000. So it's more than doubled in that time. Now, interestingly, the recent Fed minutes show that the Fed is still concerned that inflation isn't falling as fast as anticipated, and really they would like. And that's just reaffirming the recent comments that have come out over the last sort of couple of months that inflation is a little bit sticky. It's not falling as quickly as they would have liked, and potentially that just pushes out the sort of need for rate cuts until the end of the year. But it's quite interesting that market is still pricing in rate cuts towards sort of October, November of this year. And certainly on the term rates as well, they've fallen quite dramatically. 10-year is back to 443, and the 2-year is back to 486. Just a couple of weeks ago, 10-year was well above 475, and that 2-year was well above 5%. Now, the latest earnings season on the whole have been pretty sort of constructive. Guidance is sort of okay-ish. Obviously, the big techs have still done pretty well, and it's just going to be very interesting now to see how the next sort of 2 to 3 months pan out. Now, obviously, on the political front, still getting closer to that November election. At present, the polls are still showing, pretty sort of tight race between Trump and Biden. Obviously, Trump has still got his issues in the courts, and that's just going to be very interesting to see how that sort of plays out. Because if he is found guilty, then does that impact on his ability to be able to run? And probably more importantly, the support for him as well. Russia-Ukraine war still sort of rumbles on. That's over 800 days old now, and again, there's just very little end in sight. Obviously, still got the Gaza conflict as well. It's becoming a little bit harder for Israel to justify its sort of actions currently. There's a lot of international pressure for it to sort of cease the sort of military campaign there. Now, oil's backed off dramatically, currently 77 and change. But it's going to be interesting to see how that does sort of play through in the next sort of 5 to 6 weeks, especially as we approach that sort of July the 4th holiday in the US, which traditionally is the start of the big sort of driving season in the US, and obviously sort of quite sort of big demand on gas. Now, very interesting in the UK, Richie Sunak has really sort of put all his cards on the table and called an early election for July the 4th. Now, that's pretty interesting because after the recent local elections, the Conservatives and the Tories really got hammered in those local elections. Well, there is a little bit of good news out there. Sort of UK inflation, especially grocery inflation, that's fallen quite dramatically. That's come down from 3.2 to 2.4 now in the latest figures. And potentially does that see the Bank of England cut interest rates in June? And if they did, then would that be enough to sort of give the government a bit of a boost and get them over the line on July the 4th? Now, in the Eurozone, ECB is still expected to cut interest rates in June. That'll be the first sort of major central bank to be cutting interest rates in this interest rate cycle. Now, interestingly, the latest minutes from the Reserve Bank of Australia sort of indicated they were potentially looking at a rate increase at the last meeting, but ruled that out because they wanted to avoid excessive fine-tuning. Now, that's probably a clear indication of the way they're looking that, inflation is sort of falling, and, although it's still a little bit above their sort of target range, excessively just sort of going in and tweaking interest rates every sort of meeting or sort of every other meeting doesn't really have the desired effect they were looking for. So given that, it appears that they've sort of ruled out a further rate increase unless you see some big jumps in inflation. And if that is the case, then the talk then starts to revert to when will they look to cut. And at the moment, it's sort of 50-50 as to a rate cut from the RBA before year end. Now, that certainly doesn't seem to be the way in New Zealand. The Reserve Bank met yesterday and left rates unchanged. OCR still at 5.5. And sort of, the commentary that accompanied it was that rates will remain restrictive for some considerable time. But again, if you look at the New Zealand economy, it really is sort of grinding to a standstill and really does need a little bit of a boost. Obviously, the budget next week will be interesting to see what comes out of that. But again, markets sort of looking for interest rate cuts here in New Zealand towards the end of the year, sort of October, November time. And certainly the economy needs it and really should come sooner than that. Now, interesting with the Dow obviously up and sort of touching that to sort of 40,000 level. It's interesting to see the New Zealand share market from the March 20 lows is only up around 27%. So really a big laggard to global equities. A little bit of good news for the dairy sector though. Latest global auctions, they were up around 3.3% on the dairy prices. Potentially as well, there might be a further Infratel bond in the marketplace. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.